Hello everyone, welcome. Sorry, I was a bit late, 3 minutes late. So understanding market basics, something I keep repeating because we have new people in the industry, new people trying themselves as traders. So they should start from the fundamentals, they should start from the basics. You need to have an overall understanding of the market in order to be able to build your career, if you want to, if I could say that, as a trader, right? My name is Andria, a market analyst, not a head, sorry, that should be Stuart. I don't know why that stay at there. So yeah, my name is Andria, a market analyst here in Hot Forex for nearly 6 years now. Let me just introduce myself, and today we're gonna see the basics. So mainly for newbies. Don't know whether we have experienced traders over here with us, but yeah, this is a beginner's session, I'm afraid. Okay, so this is me. Mathematics and physics is my field. Study also master degree in mathematics and postgraduate diploma in actuarial sciences. And actually, I'm here because if you succeed, we're gonna succeed as a company, right? So if you're doing good, you're gonna present us. If you do good, actually, we will benefit as well. So it should be a win-win situation. I mean, that's why we are offering all this material for free. That's why we're here and saying, guys, send us an email. Tell us where you're struggling on. Tell us, I did that and that and that. Take a screenshot and send us an email and said, Andrea, I did this and this and this, but I failed. What I'm doing wrong. This is what our target is as a company in general. But personally, as Andrea and Stuart, our mission is to help you. Okay? So feel free to contact us and ask anything you want. I will reply. Sometimes I'm a bit late, but I always reply. I don't leave anything unreplied. So I'm here to help, as I said, along with all the market analysis team. So I need to go through the disclaimer warning as usual, but until I do that, please stick on the question box any questions that you have, in the question box you can see how any questions that you have, but also let me know. Oh, welcome, Faraz. Which email? Still webinars? Yes, it's still webinars at hfm.com. Okay, because we have rebranded, we have evolved into HFM. The only reason for that, shifting from Hot Forex to HFM, is just because other than Forex, we offer other products. We offer stocks, okay, physical stocks. So you can now investing, not trading only, investing in stocks. So have your own to invest your money into stocks and have ownership rights. And own actually a part of a stock or a full stock and etc. So that's why we had to involve and we changed from Hot Forex into HFM, because literally we offer more products than just Forex, and that's why we have been rebranded to HFM. So here is our email, drk webinars at hfm.com. So if you're facing any audio or visual issues, let me know, okay? So I will quickly go through the disclaimer because I need to. These materials provided to general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. Any information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment leverage product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. It is warning. Trading leveraged products such as Forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find our full risk disclosure in the website along with all the legal documentation that you might need. Everything is there. So visit our website, hfm.com, to find anything you need. So what we're gonna cover today. So today we're gonna see, oops, my bad. So today we're gonna see the basics, market basics. So this is a two sessions webinar. I cannot cover everything in an hour, so I'm always splitting it. Okay, the very first part has the fundamentals, the theory, not the fundamentals, the theory, and the second part, it has the more practical side, So in the very first, we're gonna see what the market is, from what it is affected, what we mean by fundamental and technical analysis, how they differ, what the nature of markets. In the second part, we're gonna see how actually we're gonna see the price charts, how you can read them, how you can identify a trend, some indicators. So yeah, not in depth because it's as I said, it's a two sessions webinar. So I tried to put in everything that I could, but it's a basics one. So anything that needs further explanation can be seen in our past webinar agenda, in which I covered in depth every single of these sub categories that we're gonna cover the next 2 days. So today and next Wednesday, no, next Tuesday. Yeah. So let's move on. So I would like to welcome you in this webinar with the words from one of the founding fathers of United States, Benjamin Franklin. Other than, I'm not sure how many of you are aware, but other than a scientist, politician, he was also an investor. He was also a businessman. And these words is something that you should have in mind for any aspect in your life, in my humble opinion, of course. Okay? By failing to prepare, you're preparing to fail. Okay? So, and that's why we are here together. Okay? To learn and to prepare as well as we can and succeed in the future in this in any trading career that you want to build. So the very fact that you are now here attending this webinar tells me that this is what this is what you want, that you have the right attitude, that you want to prepare yourself, because by preparing you increase the possibilities to succeed. You're preparing to succeed. Why would I know that, right? Basically, I don't need to prove anything. I mean, in every single everything in life, not only trading, okay, everything in life. I mean, school, university, a business, if you want to open a shop, anything in life needs, in order to succeed, needs a plan. You cannot open a shop without having a business plan, right? You cannot get to the college if you haven't prepared in order to succeed in the exams, right? So yeah, it's common sense. So the fact that you are here tells me that you are willing to learn and prepare. And preparation is by far the most important thing a trader can do. And this is proven with with surveys, with a lot of research. I mean, one of the most successful institutional fund manager said that he spent, and I'm referring to Warren Buffett, by the way, said that he spends 99% of his time preparing to trade and just 1% of his time to actually trade. 99% of his time just to prepare and 1% just to open that trade. Okay, to take action. So, okay, that was just a small intro. Now let's start officially. Let's start with how the market works, right? Where is it depending from? What is dependent? How it moves? Why it moves? Everything has to do with supply and demand. Okay. You know, in every single market, not only in Forex, not only in financial markets. Think your local grocery store, right? That you're buying your groceries. If it has a lot of demand, it has a lot of people buying stuff from him, and etc. Okay, it's becoming. It has he will do good and he will grow and etc. If he doesn't have, however, a lot of demand, doesn't have a lot of clients, his clients detecting it won't do great, right? It cannot expand, right? So everything depends from supply and demand. So if let's say you are, I don't know, you are producing, you're actually planting apples, and you're selling your apples. The more the demand you have, right? So what you aim to do is actually supply the most that you can to the market, to sell all of your products, to supply the grocery shops with your apples, right? But in order to do that, you need the necessary demand from the grocery shop. You need orders, right? So everything depends from supply and demand. If you don't have a lot of supply, so you have just, I don't know, you're producing per month 100 apples, okay, so you have a low supply, but the demand is high, more than 100 apples, is double, then you can increase the price of your product, right? Because it's a bit, how can I say that? It is a bit unique. Can I say that? We are talking about apples, but I think you understand what I'm trying to say. So everything depends from supply and demand. If there is a lot of supply, then that has an impact on the price as well. So this is pretty much, with this apple example that I gave, this is how pretty much the market works. This is how the prices are set. They are based on these principles. They are based on the same principles both in street and financial markets, just like in the street market. This is how you need to think about it. So like the example that I gave with the apple, like the one that I gave below about watermelons and etc. This is how financial markets want. There are people in the financial markets who want to sell, and there are people who want to buy. Okay, so the financial markets are affected by how many people want to sell that particular time and how many people are willing to buy. and vice versa. Okay, so over here I have a little image in regards to the participants of financial markets. So instead, like in the street market, we have the grocery shops, we have us as consumers, and etc. In the financial markets, we have banks, we have institutional traders, so the big traders that trade millions. We have retail traders, so low budget traders. We have brokers, we have market makers, we have governments. So all of them are market participants. So what you need to have in mind is that the markets move according to how high the demand is and how high the supply is, or how low they are. So price, if there is a low supply, price is likely, so lower supply than demand, the price is likely to be higher than usual. And okay, eventually this will attract other sellers as well, because if you are a person that produces apples, for example, okay, and you have I don't know, you are the only one in the industry, you're the only one that sells apple, there is a lot of demand, so you have put apple, I don't know, 10 euros per apple, so other people think, oh, he's gaining a lot, I will produce apples as well, I want to become a seller as well. So slowly the competition, okay, will attract people, right? So the higher the price is, this is attracting other sellers. So as soon as more sellers arrive, price could move lower. Conversely, in the demand side, if there is only one buyer for your apples, okay, but many sellers, I mean, you can buy an apple from all over the place. I mean, every meter that you're walking, you can find a different shop that sells the same thing. So if there is low demand, this is what I'm trying to say. So just a single buyer, but many sellers, price tends to fall. And again, if it reach a bottom or something, and when it fall very low, that could attract buyers, because other people say, oh, it's very cheap, I can afford buying it, etc. So eventually could rise. So that's just the how simple you should think about supply and demand in the market. And here I'm bringing my examples for apples, but in the financial market, in the forex market, more precisely, here we have a gold chart. It doesn't matter the time frame, doesn't matter from how back I went for this chart. It's just a good interpretation of a rising price due to low supply and high demand. Okay, so you can see that gold over here rally for 4 years in a row. Can you see how this is a 4-year chart from 2008 to 2012? It was keep rising and rising and rising and rising. Why is that? It's because there was a lot of demand but less supply. So if there are only a few sellers in the gold contract, so supply is weak, but a lot of buyers, right? That means that there is no pressure on the prices, so that's why prices moves higher. And this is what happened with the gold: low supply, huge demand, and it was keep rising and rising and rising. Eventually, nothing can go up forever, right? Eventually, the high price could eventually attract sellers. And this is why I put in circle this peak over here. Because after such a significant and long-term rally, that quick return down of the price and a sharp pressure on the price, okay, is what attracted more sellers. Okay, people wanted to sell at a high price in order to benefit at a high price. So this is where sellers are coming into play, and we have seen it slowly detecting, and this is when the sellers make their contracts available in the marketplace, okay, and the price of the gold started falling because the owners of gold contracts, right, they thought at this point that, okay, cannot go further higher. So now that it's at its peak, let's sell it, okay, at a high price. And this is where, and they make it available in the market price. That's why slowly afterwards, gold started to decline. So the line that I have put by connecting the lows is help us to define the direction of our asset. Over here we have the vice versa scenario. We can see, actually, we can spot over here that the demand was lower than the supply. So there was a lot of sellers, there were a lot of suppliers, but less demand. That's why the gold contract over here, it was posting some lower highs. So it was slowly falling. The price of gold was falling until it bottom over here, and this sharp bounce higher attracted some buyers. So the low prices in general tend to attract buyers because people want to catch and to enter the market at the low price. So since that attracted some buyers, and as they emerge, the price of gold stopped moving lower and started moving higher again. Okay, so now we have seen in general the supply and demand. Oh yes, PDF Ocon. Of course, how do we find upwards and downwards strength? By seeing bar. Okay, you can. Trend lines help significantly to identify whether your overall trend is upwards or downwards. Have you noticed that I have connected over here? I have connected my lows, and I spotted that there is an uptrend over here, because you literally see, because you're seeing higher lows and higher highs. Then if you see something like that, so higher lows and higher highs, then you need to try and connect the lows with a line. So if you do that, you're gonna see whether the line is pointing upwards or downwards or flat. The same stands for here. I could see lower lows and lower highs. So by connecting the highs, because this will give me a resistance area, by connecting the highs, I can spot that it used to be in a downtrend, because you can see here something changed. It bounced, it came back again, but it didn't provide another lower low. That new low was higher than the previous one. So yeah, so trend lines I help on spotting the overall trend, right? No, it doesn't matter for us. It doesn't matter. It's upon your discretion. I mean, whether, first of all, you need to identify whether you are an intraday trader or a long-term trader, and you need to stick on that. Okay. But regardless of that, first of all, you need to start from identify the overall trend. What I mean, if you are interested, let's say to okay, here is a Bitcoin, but yeah, okay, let's do that. If you are interested in Bitcoin, over here I have a daily chart, okay, because I want to spot where what's the overall trend? So, okay, so that was since March 2022. So it was moving down, as you can see, but I can connect my highs the best way I can, right? I need to have as much points as possible. Okay, so it was in a downtrend, right? So overall is in a downtrend, right? Okay, over here, I could see that it found the bottom. So it didn't manage to extend to move further to the downside to continue this downtrend, right? It's stop over here. So I put a line over here just to keep monitoring it. So I know, let me get rid of that. So I know in the daily chart that the overall trend of Bitcoin, for example, is downwards. I have seen that it broken over here my line, but it's still, I don't see the overall picture changing. I don't see an uptrend, the beginning of an uptrend or something, right? So you are aware of the overall trend. You might want to stick to the daily chart because you're a person that prefers to be, I mean, to have a calm. I mean, the daily chart is a medium-term chart, so it's not as volatile as 30 minutes chart, 15-minute chart, and etc. So you want to, if this is your approach, if this is your preference, you're gonna stick to that one. But if you have seen, if you, okay, obviously you need to practice, right? You need to test yourself and see until you figure out what kind of trader you are. Okay, so by testing a demo account, by figuring out whether you are a day trader or a 1 hour trader, intraday trader, 30 minutes trader, etc. This is something that you should identify because it's upon our personality. Okay, a person that is super stressful, okay, he cannot trade in short term environments such as 15 minutes chart because that will mean higher stress. He needs to be on his PC watching the chart because it's a really fast environment, very volatile environment. So it depends on you mainly. So that's why you need to try after you're done with the basics. You need to try need to figure out whether you are a scalper, an intraday trader, a long-term trader, so everything, even your strategy, whether you're a person that prefers price action, I mean, is not really key on using indicators, etc. So that's up on you. I cannot really advise which time you are good at. You need to figure out. Yes, there is a recording. Don't worry, Guido, there is a recording and it will be sent to you by the latest tomorrow. If it's in a downtrend, it means that, so if it's in a downtrend, can you see, it means that it will continue moving lower unless if we see the asset breaking and moving above our line. So yeah, it will mean that it will continue moving lower. So moving lower, what that means, Kevin? I will not reply. You said, should I sell or buy? If it's moving lower, if the price moves lower, what you should do? Exactly. Okay, so I was ready to cover a bit the human emotions and news. So we said that it's affected by supply and demand. It's not only that. It's also a big part of it is human emotions and sentiment. You can see this, especially the last 2 years with everything that we are facing. I mean, from pandemic to Ukrainian-Russian war, now with the China and Taiwan, with the oil, with the energy crisis, with the fear of recession all over the world. Yes, markets are affected by human emotions and news. That's why you need to keep yourself up to date with what's going on around you, right? Especially if you are a medium and long-term trader. If you are a trader that trades in a daily, weekly, and monthly monthly basis, you need to be up to date with the outlooks per country, with the news. But that's not only for medium and long-term traders. Also, that affects intraday traders, because if something happened right now, I mean, I don't know, let's assume that Bloomberg reports that China proceeded with a military activity. That could affect the Asian, not only the Asian markets, but the markets, because that will spread the fear that, oh, are we gonna have another war? So what's going on? And that, so yeah, news affect the markets, human emotions affect the markets, and that's why you need to keep yourself up to date with agenda, economic agenda, and with the news. Okay, now, so what I mean by human emotions, it is often claimed that market participants, you remember which who are the market participants? We said it earlier, are the big banks, the governments, the institutional players, us as retail sales, brokers, and etc. So the market participants, actually, it is often claimed that all these market participants are so rational in their thinking and actions that human emotions do not play a part in the market moves. However, the experience of many market observers shows that the price moves off very often irrational and emotionally driven. And this is can be seen the last 2 years. For example, when the pandemic spiked, we had seen, look at that, look at these charts. If I go back to the pandemic, okay, it was March, oops. Let me just put something on and just daily, weekly. Here we are, oops. Okay. We have a dip as well the last few months. So that has to do with the recession, with the we are facing another recession globally, and that affected the stock market over here. But over here, you see, this big move over here was when the pandemic started. So the pandemic spiked the fear all over the world. Okay, so yeah, it is also something that we should take in mind. So from what we have seen in the history of financial markets, whenever money is involved, there is no lack of human emotions. Okay, and that's why I put this great, oops, come on, this great human emotion action over here. Because it shows that the first guy over here says on the phone that he has a stock that could do really well. He could excel. The next guy, instead of hearing everything that the first guy heard, he said he heard just really excel, and that was changed from mouth to mouth until everyone thought that the excel meant it was changing to sell. So when that was when the panic happened, and everyone was like, so the rumors, right? You know, the rumors often twisted, and soon everybody over here is selling. There is a panic, a real panic. Eventually, someone decided that this panic, all this selling pressure, all this falling of prices and etc. is a madness, and he doesn't want to participate anymore. He said, I cannot take it anymore. This is madness. Goodbye. So I'm leaving. I'm not selling anymore. I'm getting out. I don't want to do anything else. And said, uh, so it doesn't take long, as you can see, for the ground to misinterpret the message and start buying. Goodbye, buy, 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 and there is a real mania breaks out. I know this is an extreme scenario, but yeah, it's something that sometimes we see in the markets. So, for example, the pandemic, when the pandemic started and the globe put restrictions and we are in a lockdown, the businesses were closed, etc. A panic happened and everyone was selling. Okay, so you see, it is. So yeah, and the madness is about to start all over again. So just a little comic helping to understand how important the human emotions are. So okay, so that's actually a way to make you understand that you need to leave emotions out of the way. Stick on what you see, not what you think or what you heard. Stick on what you see, okay? What you see in your actual charts. If there is a continuous selling pressure, you can see that that price is moving lower and lower. Yeah, so there is a lot of, but don't waste your time to hear others. Stick on what you think, on what you study, on what you understand, on what you see. Okay, so here's the same gold chart again. But looking back, where would you have chosen to sell your contract? Just let me know. I'm gonna zoom in a bit. So looking back, right, where you would have chosen to sell your contract? On number 1, number 2, number 3, number 4, number 5. Anyone? Would you have sold your position at the top on the circle? But that's obvious, right? You couldn't tell over there that that was the top, right? You couldn't thought that that was the top. You wouldn't know. You figure out that that was the top afterwards, that you were seeing the price moving lower. So it's not very obvious sometimes. So what you need to do is keep yourself, as I said, with, I need to download the material, but I cannot see it on the, oh, sorry, my bad. Let me double check, Precious, just a second. It was my bad. Come on. Oh, it's not responding. Give me a second. Try again now. Okay, sorry. That should be on right now in the handout section. Everyone, I have put on the PDF version, so feel free to download it from the handout section. So what I was saying, yeah, they couldn't say that that was a peak. Okay, unless if we have kept ourselves up to date with the news. And actually, back then, there were some news, and back then, okay, the news were actually good for the gold. Everyone was bullish, and everyone loved gold. But regardless of the fact that gold fundamentals were good, there is a, a big dip lower. Okay, so back then, to be more precise, that was in 2011. There was a bull run. We can see that lasted for more than 4 years, right? And the anticipation was that they were thinking back then, the big publishing houses were saying that gold could breach as high as 5,000. 5,000. Okay, but JP Morgan came out and said, "Oh, the global recovery is bad for gold." And some reports came out adding pressure on the gold. There were like reports that gold will soon need to correct and to move lower, and it could go as low as 1,000, etc. So the sentiment changed. So sentiment is always bad when prices are at levels where they have real potentials to turn higher again. But yeah, even though the fundamentals, that was a weird thing. Yes, happened yesterday. The fact that the fundamentals were actually the fundamentals supported the gold. However, that news from Bloomberg, JP Morgan, etc., added pressure to they changed the sentiment. The sentiment actually back then it was better than ever. As I said, the people were actually predicting, investors were predicting that the gold could breach as high as 5,000. And news are always good when the prices are high. Bloomberg more precisely said that China 2011 demand for gold to exceed consumption in China. So, but afterwards, as I said, it was afterwards, so more precisely, a year after, things change, and the slowdown started. So news sometimes, or human emotions, could be very misleading. That's why I was saying we need to keep yourself up to date with what's going on around you, right? With the news, with reports, against that, but stick on what you see. So technical analysis will be your backup if the human emotions or news twist the sentiment. That's why it's always to have a combination of both, being up to date with the fundamentals, let's say how gold is doing, whether there is a lot of consumption, a lot of demand, whether we are in an environment of high interest rates, because the higher the interest rates, the more the pressure of gold, what's going on with the exports and imports of gold, for example, etc., with the fundamentals, what's going on around with with the politics and etc., whether the global economy is growing or not. You need to keep yourself up to date with this, but your backup will be technical analysis, because it will help you to step away from any misleading things, and will provide you the tools you need for rational decision making. Okay, here it's not a chart, it's just an illustration. Okay, so so we can see that there were some peaks and some sharp drifts and etc. So what happened, what this means is that So actually, to be more precise, this is an illustration of S&P 500 index back in 2007. So the motion back in 2007 over here, what do you think the motion was? There was a lot of, you see that? So there was a lot of buying that picked the S&P 500 to over here, okay? And the news was good, and some analysts said that said another important US stock market index such as Dow Jones, for example, is gonna get double of what it is right now, and etc. But that quickly changed. So the sentiment 2 years afterwards, it changed. So it was hopeless. Banks were full of problem loans, jobless rates were high, and people couldn't spend or buy money. So everything was bad, and that ended with the index bottoming over here. So there was a selling maniac. Two main. So we said about emotion, sentiment, how the market is moving, very, very briefly. I mentioned fundamental and technical analysis though. So what are the difference? Guys, I know that this session might be a bit boring because it doesn't have a lot of technicals, but it's for newbies. In the next session, we're gonna see some indicators as well, some trend lines, candlesticks, and what they mean, how you can read them, and etc. So it's a different one. But in this session, I need to at least cover the theory, the basics of it. Okay, so sorry for those that are already traders and they are aware of all this, etc. Third sell candle from your sell code could have been too soon. Oh, let me see. Where are you? Should be you're on the. Are you here, dear K? Third, sell candle from your sell circle. So you have. I guess you were here. Oh yeah, on my question that I asked earlier. So 1, 2, 3. Third, actually, okay. It should be ideal, but you couldn't know, right? So for me, no, it wasn't a signal. It wouldn't trigger me to enter. Why? Because still my price is above my trend line. So something to convince me and to confirm me that the 4 years uptrend ended and changed from upwards to downwards, it will be that one. You might think that it's too late, but it was the only confirmation that I have that it was the very first candle that confirmed me that my price is below my 4 years trend line, my 4 years upwards trend. Okay, it was retested over here. It didn't manage to break it though. Retested again here. It closed below it, but extended declines over here. So that would be the trigger point for me. So and the continuation of this trend, you can see it over here. So let me just zoom in. So okay, this is a weekly chart. Obviously, it's for long-term traders, right? So this candle would be somewhere in the mid of April. So let's see how we ended. Here we are. So mid of April. Where's April? Wait. Where am I? Sorry. Oh, I don't have the full chart over here, seems. 2012. Okay, I don't have the full chart. That's from 2013, but yeah, it's a very, very long-term approach. Okay, maybe I will find a different one to show you, DRK, okay? Or tell me one that you want, and we can see it together. So there are two types of analysis. We're gonna just touch it a bit today. We're gonna continue next week. So fundamental analysis, what we mean by that? Simply when you're simply simply when you're trying to see to figure out the value of your investment. So the value of your currency pair, if it's about a currency pair, the value of your of gold, if it's gold, the value of oil, if it's you're thinking about oil. So fundamental analysis seeks to establish the value of the investment considered. So for example, if you want to trade euro dollar, either in the long term or in the short term, but let's take on the long term. So euro dollar involves two currencies, euro and dollar. So it involves two countries, Europe and United States. So you need to be aware whether United States economy is healthy or not, or whether the European economy is healthy or not. So for example, we know that Europe is already in a recession, right? And this has been seen by the data we're getting this year. That's why this is a weekly chart. That's why, since the euro and dollar have been in a sharp decline, right, since last year, right? Because even though there are worries for global recession, however, dollar and the United States economy is doing much better than European economy. European economy is in a recession without any significant action from the central bankers to support the economy. While on the flip side, dollar has been supported because the labor market is still strong, right? There is still activity in the services sector. The central banks are keep rising interest rates in order to support to control the inflation. So if you are about to trade a currency pair, you need to study a bit the two currencies, Europe and dollar, for example. So you need to study what's going on in Europe, what's going on in the US economy, and their comparison. So yeah, if I just either connect, put a trend line or use my indicators, you can use we have plenty of indicators. So we can see that nothing really changed the last year for euro dollar. It's a continuous decline. It didn't break outside the channel. So there is still moving in a downwards trend, right? So that's the over interpretation because we're in a weekly chart, obviously. So yeah, this is where the fundamental analysis sticks on studying beyond what the trend is presenting, to study the overall factors that affect an asset, fundamental factors. Either it has to do with the economy of a country, if we are referring to commodity, whether from what the factors that affect it. For example, guys, did you know that palladium is a key commodity that has been used for electric vehicles? So it's necessary for creating a hybrid and electric vehicles machine. Did you know that? Sorry. So by studying an asset in depth makes you understand whether in the long term it will appreciate or depreciate, whether it will move up or down in the long term. Okay, obviously if you're a scalper, you're an intraday trader focusing on 30 minutes chart or 1 hour chart, you can solely stick on what is the agenda of the day, the economic calendar of the day, in order to make sure that your asset won't be affected significantly by any news that will be out today. And from your technical analysis, this will be something that the intraday trader should consider. But in regards to the long-term trading, yes, you need to go in depth and see the fundamentals. So as I said, technical analysis looks at price behavior. Okay, so it looks at the chart, use price behavior, any peaks, any bottoms, any ranges, any the indicators as well, and etc. So we are is the study of the price action. That is what technical analysis is. This information is used to decide when to buy, sell, or hold. Now, as we said, fundamental analysis seeks value for long-term oriented investing. So, So let's read this together, because I think it's the very last slide, and then we're gonna cover everything that has to do with technicals in the next session. So with stocks, this involves studying balance sheets. I mean, if you're interested on Amazon stock, what you will do, how you will spot whether Amazon has a positive a future outlook, is expected to grow, it's expected to the stock price to move higher. How are you going to study that? Simply by studying its financial reports, its balance sheets, its income statements, its cash flow statements, to see whether it's a healthy company, whether it has investments that they will be proven very beneficial in the future. So now stock investors seek to understand how the stocks are priced in relation to the value they think the financial statement imply. So this is what they do. Now, how that has similarities with the Forex market. So in the case of Forex market, fundamental analysis, as I said earlier, could include the assessment of a country's economical development or inflation expectations and central bank rate policy. And this is something that we are facing right now, or a very high inflation, a rising inflation all over the world, with the central banks trying to control inflation. So that's why we are seeing, for example, the euro dollar moving lower and lower for nearly a year now, because the Fed, the central bank of US, even though the US economy was doing much better than the rest of the big economies, the Fed increased interest rates. Right now, the interest rates in US stand at 2.5%, if I'm not mistaken, and they are thinking of increase even more on September. On the flip side, euro, it has just 0.50% interest rate, so there is a huge gap between the two economies. You know, the higher the interest rates of a country is, the more expensive its currency gets. That's why dollar is stronger than euro, and it keeps moving lower over here, and the euro dollars keep moving lower. So yeah, even if you're a Forex market trader, you need to be aware of the economic development of the country, of the inflation expectations, and of the central bank rates policy and its potential actions. So economic conditions of a country change slowly. This is why currency pairs will have trends that last for a fairly long period of time. So do you understand now the difference with, do you understand now the concept of fundamental analysis? Fundamental analysis is more often long-term oriented, but it gives us the overall trend, right? Because trend is our friend. If we are aware of the overall trend, that would be good for us, because we can go along with the trend. The likes of Warren Buffett and George Soros look at fundamental information as they are planning to hold their investments for several years, because they are long-term investors. So these gigantic traders, Warren Buffett and George Soros, they use the top-down approach. So what that means, it means that they start with an analysis of global economic trends, and then they move to local level to study the economy of a country, after which they analyze the economy of a country. They move down to the industries, such as banks, retailers, industrial companies, etc. And once they find a sector with future potential, they start to look for companies inside that sector in order to invest. and they are interested in value. This is why these two have been the biggest and most successful traders in the world ever, because this is what they use. They use a top-down approach, starting from the global economy, moving down to the economy of a country. If economies of countries is very, very healthy, they move down to the industries, banks, retailers, industrial companies. They study that. They find the sector that it has a good potential to succeed, and they try to find companies that are included in this sector in order to invest from their startups. The same stands with stocks. With stocks, this involves studying of balance sheets, income statement, cash flow statements, and etc., as I already said. Okay, guys, I'm gonna call it a day because the next slide has to do with technical analysis, so we're gonna cover that in the next session. Okay, you see that? That's what we're gonna cover in the next session. We are at the top of the hour, so yeah, cycle, nature, technical analysis, how to read the charts, how to read the candles, some indicators as well, how you can trade in a sideways movement, in a sideways market. What else? What I have put on? I have put moving averages and Bollingers, which are the most famous indicators. The most popular one and the most widely used ones. Yeah, all this is something that we're gonna see in the next session. So that was the end for today. Where does one look to get? So, okay, good question. So Ajani is asking, how does one get a fundamental analysis or information? I mean, where does one look to get all this? Okay, depends. Now we have earnings season, right? If you're interested about to trade a stock, a particular stock, I mean, you might want to invest in a Tesla. You might want to trade a Tesla. You might want to invest in Amazon, etc. So you need to Google, literally Google, and find out the financial reports of Amazon, and also to Google it, write Amazon earnings and see how well it has performed the last quarter. What is its future investments? How much they have estimated that its future investments gonna bring to the company. So for example, let me. I was having a session every Monday. I had a session every Monday. So for example, let me just find out where was it? Was this one? Where is it? Where is it? Where is it? Okay, so last week I presented I presented about the company earnings special. So so you see Apple over here, okay? There was a lot of risk for Apple, but the revenue for the second quarter, so its sales, its profit was expected to be at 82 billions. So 2 years higher than last year. So there is a growth regardless of all this risk. And something that I found out that it will potentially support even more Apple, it was its services from its Apple TV streaming, okay, that and the general annual services, the general services that they offer, so Apple Plus and its app, its etc., are expected to give here another 80 billions this year. So by studying a stock and the company in depth, you can see their future investments and how much they are anticipate every single one of those investments to bring them back. So for example, Microsoft is keep working for many years on cloud computing platform Azure, on intelligent cloud, on artificial intelligence. So that is anticipated to give him 21 billions just for the intelligent ground, right? That was, and sorry, that was Azure, and another 21 from intelligent cloud. So by studying in depth a company, you can see their future plans and how much how likely it would be to give them to bring profits on them, and how big profits that would be. So you see, so, or if it's a company that it's not expected to perform well, you can see that by studying their financial reports and their plans, right? So for example, Pfizer over here, it's expected its growth is expected to decline because the majority of the world has been vaccinated. So the COVID-19 vaccine, even though it offers a lot of profits to the company, now the sales have detracted significantly. So that could add a risk on its near-term outlook. So this is the way. Now, if you're actually focusing on Forex market, on just try to search online and find as many materials as possible to figure out whether there is a lot of demand for platinum, or a lot of demand for copper, or a lot of demand for coffee, if it's about these assets. Now, you're referring to currency pairs. By keeping yourself up to date with the economic calendar, and this will be the economic calendar. Let me just share it with you, and be aware every day of what's going on around you, what's the next step from the Fed, or from the ECB, or from the Bank of Australia, if you're interested on Australian currency crosses. Or so just keep yourself up to date with what's going on around you, and you can see this either by checking the economic calendar every day, right? The latest news. So we have latest news over here, or using Financial Times, market news, Financial Times, Reuters, Bloomberg, hearing the news every night. There is a lot, there are plenty of sources. Okay, so depends on what you're looking for. So guys, I will call it a day. Anything you need, I'm here to help. Thank you for attending. Hopefully I will see you next week as well. Have a great day ahead. Take care, because today we have, I'm not sure whether OPEC reported anything that could affect. It did? Oh, yes. Sure, it says that, yeah, sure, just said that. So how much, sorry?
100,000 barrels per day.
100.
Price, one expects to move, so oil's moved up.
Okay, so oil moved higher on the announcement of OPEC just earlier to raise oil production. So yeah, that's something that spike oil higher right now. So let's see it together. Let's see what's going on. Yeah, that's why it's bounced. That's an hourly chart, and that was on the announcement of OPEC Plus and their decision for September's production. So it spiked. So that's why I'm saying you need to keep yourself up to date with the news. So today we just had the announcement from OPEC, something that boosted oil higher on the announcement. And later on, we have, where's my calendar? We have the ISM services, if I'm not mistaken. Yes. Yeah, here it is, ISM services from United States. So you need to keep yourself up to date. So thank you for watching. Hope you're having a great day ahead, and see you again tomorrow. Yeah. Bye-bye, guys. Thank you. Bye.